I want to talk about a new, just horrific policy that the Biden regime has put into effect. And this is a policy and a rule that requires credit agencies to penalize people with good credit who are getting mortgages and to give the benefit to people with bad credit. I mean, think about it. In a society, by and large, you want to encourage productive behavior. You want to discourage bad behavior, in this case, not paying your bills. And yet for the Biden administration, it's the opposite. And so what we're talking about here is a rule that has been put into effect by the Federal Housing Finance Agency. It's called FHFA, which allows consumers with lower credit, bad credit ratings, and less money for a down payment to get better mortgage rates than they otherwise would have. And now this is obviously going to impose a cost. So who's going to bear the cost? Well, it turns out the costs are being passed on to those with good credit. This is such a preposterous and really evil scheme that even an Obama official, this is the former Obama housing chief, a guy named Stevens, and he goes, this is not a good idea, because he says that by and large, what you're doing is, this is convoluted, he says, the entire discipline and credit risk pricing structure that Fannie Mae and Freddie Mac have followed since their inception. So Fannie Mae and Freddie Mac, these giant entities that basically deal with mortgages across the country. And of course, the principle of mortgage is really simple. If you have good credit, you should be able to, and you're putting a big chunk of money down. So you're buying a $300,000 house. You're like, okay, listen, I'll put 20% down. I have really good credit. You get a better rate. But what the Biden administration is saying is that, no, we want to encourage more new and first-time and minority home buyers. Those people, by and large, typically have bad credit. So what do we want to do? We want to make it easier for them to get mortgages. So we got to give them a better rate, then they're going to be more likely to do it. But hey, there's a price to be paid here, and so we're going to impose it. This is nothing more than taking the same logic that they use with taxes. Basically, if you make more money, we're going to penalize you for it by charging you, by making you pay a higher proportion of your income in taxes. And now this is extending to mortgages. And so this guy Stevens, this Obama official, he goes, the mortgage industry is outraged because he says, and he's quoting from an executive with a mortgage company. He goes, so I guess we have to teach borrowers to worsen their credit before they apply for a mortgage to get the better price. So the intention here, which is, by the way, good intentions in this area almost always lead to bad results. You might remember the kind of mortgage crash of 2008. Well, what brought it about was not because there was sort of reckless behavior by banks. Well, the reckless behavior by banks, to put it differently, was caused by government agencies pressuring the banks to change their lending standards. Why? In order to, by and large, make credit available to people who didn't deserve credit, to make mortgage loans available to people who didn't really qualify for them. So by strong-arming the banks into doing that, by and large, the government got this result, which is basically a massive defaults by people who bought houses that they couldn't afford and then, no surprise, couldn't make the payments. Banks began to then repossess those houses, but there were so many of them, it was not easy to sell. So housing prices then begin to crash. So this is what happens when you let progressives run an economy. They operate without regard to market principles, and they do a very common thing, which is they punish good behavior and they reward bad behavior. We're seeing this again. This goes beyond mortgages. Look at crime policies. By and large, if you subsidize crime, you get more of it. And on the other hand, if you discourage, demoralize, and defund the police, fewer people want to become cops and the streets become more dangerous. So I see this. The Biden people are trying to make it sound like this change in credit is no big deal. They, to quote them, they're saying in effect, quote, we are increase pricing support for purchased borrowers limited by income or by wealth. So basically we're trying to help these people. And they come with, quote, minimal fee changes. Well, it's about $40 a month for a typical family that has good credit. Their mortgage is going to kick up $40 more, but $40 a month adds up. So that's $500 a year. And think about the value of that kind of thing over, let's say, the life of a mortgage. So over 30 years, you're talking about not an insignificant amount of money. And frankly, if it was an insignificant amount of money, they wouldn't have to pass the rule in the first place. So they know it's a significant amount of money. And for me, this is bad in itself, but also indicative of just a broad pattern of bad policies that are being implemented by the Biden administration.